Hey everybody, Boris. Welcome to the weekly technicals for January 16th to January 20th, 2017. The big issue next week is there going to be more dollar weakness? We've had the dollar correct for the last 2 weeks, correct significantly actually against the yen as the week came to a close, and sent quite a lot of interesting signals that a lot of the Trump trade, the trade that is basically essentially long yields, long US dollar, long US equities, meaning it's a trade basically bet on stronger US growth, higher US inflation, higher US rates, all of those bets are starting to oscillate. They're starting to really hesitate as the market begins to realize that when Trump comes to power, his policy agenda and implementation of a lot of his ideas could take longer and may be much weaker than initially intended. Now, this very well could be the pause that refreshes. The underlying data in the U.S. remains strong, but not overly strong. So, data, for example, that we had last Friday from the U.S. retail sales shows that while the gross retail sales continues to expand, the underlying trend still remains very tentative. It suggests overall that U.S. economy continues to grow, but not at this accelerated pace, which is what the market has really priced in since the Trump election, which has been the primary driver behind the U.S. Strength. So in many ways, all of these big trends and all these big question marks start to unwind as the year begins. And I don't think the unwind is over just yet. Add to that the fact that this week we also have the ECB presser. And ECB is really intended to testify that conditions in Europe are starting to generally improve. That should be modestly euro positive because it would suggest that the ECB is certainly going to consider not first of all not add any further additional policy easing with QE, but begin to taper a lot of its QE. And while tapering is certainly not the same thing as raising interest rates, it's really the direction in FX that always matters more than the absolute value of the play. So if the European monetary policy begins to contract, becomes more less accommodative, and U.S. policy really doesn't become tight as the market thinks, the big bet in the dollar is 3 rate hikes or 2. And given the conditions now, it really feels much more like it's going to be 2 rate hikes rather than 3. And the market has pretty much priced the dollar for 3 rate hikes. So the correction of the dollar, the move towards less tightening more tightening in the Eurozone, all of that provides us for an opportunity for further dollar weakness if the trends continue to go their way. And dollar yen, of course, is going to respond very much in concert. In fact, dollar yen has been a very good signal for dollar weakness over this past week. Let's take a look at the levels, and then I'll just show you the charts and show you exactly what I mean as far as where the plays are. Euro is knocking its head into this very key 107 resistance. That's going to be very important to watch during the ECB presser, because that gets blown out. There is at least another 100, maybe 150 points of upside potential on a short squeeze. With dollar yen, it's the exact opposite. It's really knocking down below this 114 handle, which has been a very important support level. And a peak below there one more time could really cement a much steeper correction. What you're seeing in dollar yen, and I'll show this to you on the charts in just a second, is a continuous and repetitive failure to make fresh highs. And that's as good a signal of a turn as we can get technically in the market. And cable, of course, is its own story. So cable's story is really unique because it's really all about Brexit. Now we do have UK employment data, we have CPI data, all that's in retail sales, all that presumably should be relatively good, but none of it is going to matter because Tuesday we have Theresa May giving her Brexit speech, and really the story in cable is hard Brexit versus soft Brexit. Overlaid over that, by the way, is the absolute unknown of the UK Supreme Court decision, which is also unknown as to when they're going to release it. Now the timeline is it should be sometime before January 31st. So there's a small potential here that the UK Supreme Court could actually provide news as well as Theresa May in her speech. Now, she is intended to provide more details, and she's certainly moving much more towards what's the market is considered to be a hard exit, which is basically no compromise on immigration, and therefore willing to pay the price on access to the free market. The Supreme Court issue is a completely different and more fascinating issue, which is that if the Supreme Court comes back, and a lot of legal experts tell me that they very likely will come back with the ruling that Miss May simply cannot proceed with Brexit unilaterally, that it must get approval from Parliament, that would be a very positive burst to the to the pound, because it would be seen as a much more of a stronger possibility of a soft Brexit rather than a hard Brexit, and perhaps even no Brexit whatsoever, because Parliament could just simply vote the whole idea down. So a lot of uncertainty around cable, and it's really coming in against some very key support levels, which is why it's very much worth watching, of course, as a volatile play. But it can go completely two different ways depending on how the news goes. It's really going to be a very news flow driven trade, and therefore I would watch the technicals only as a reference point. Let's look at the charts here and just see how everything lines up. So here's the euro, and here's what I'm talking about. Euro certainly made a very clear, definitive double bottom here at the end of the month in December around the 104 level, and we've been peaking above this 106 level. Now this 106, 106.50, pretty serious resistance, as you can see. But if ECB breaks us to the upside, if we go through the 107s, then the real resist is sort of this 108 spike, spike reversal. This is actually from the, ironically enough, this is, I think, from the ECB presser at the beginning of December. So it would be truly ironic if we made a full round turn, ECB presser to ECB presser, where we recaptured pretty much the prices from which we fell, which is, I think, a pretty reasonable scenario. I'm generally bullish euros on the assumption, both because the price action is really looking supportive. Let me show you what I mean about the supportive price action. Maybe I should even, I rarely do this in the text, but I think it's worthwhile for us to go maybe on a four-hour chart, because what I love to see on any kind of a longer term chart, this is one of my favorite patterns, is just simply to see a series of higher lows. Whenever you're looking at an uptrend, it really doesn't matter what the highs are doing. Again, it's like watching a magician. Don't watch what he's showing you, watch what he's not doing. And what the market is not doing is not making fresh lows. They're buying every dip that's happening. And the fact the market is buying all the dips tells me that the price action, underlying price action in the euro, is bullish. And if we can take out this 107, it really points us on target towards the 108. It can also be one of those fast and furious squeezes all the way up to the 108. I would not, in any shape, way, or form, fade the move, which is, I think, going to be a very knee-jerk reaction on the assumption that this is just overbought and the dollar is going to strengthen again. No, the dollar story is kind of done for now, and the squeeze in the euro could be more severe. I like either buying the breakout or buying the dips in the euro here, assuming that the ECB does not surprise the market with significant amount of dovish talk, which is unlikely given the underlying fundamentals. Now, with dollar yen, it's the exact opposite, and this is the other thing that's interesting: is the continuous failure to make fresh highs. We couldn't hold the 15, couldn't hold the 16s, couldn't hold the 17s. Yesterday, which was really fascinating, decent U.S. data. Okay. Okay, consumer confidence. Rates were up for a while, and yet we couldn't hold the 15s, which is a true sign, I think, of a relatively weak trade. The only thing that's sort of interesting here from a bullish perspective is this 1375. Now, if 1375 holds one more time, that would suggest that maybe the correction in the dollar is coming to a little bit to an end, and there's a pause in the correction. We could have a counter trend move back up towards the 116, 117 level, which still remains to be a very key resist. If the 1375 goes, and this is where I like the yen trade, is actually on a momentum to the downside. If we break the 1375s to the downside, that sends a very powerful impulse signal that there's more downside to go, and we potentially could go all the way out to 111s, ultimately maybe even down to 110s. Remember, I said that the yen loves to trade in nickel increments. So when we took the 110s, the next target was 115s, and we achieved that. When we ran through the 115s, the next natural target was 120. We failed twice to come up towards this 120 level, and now we're back below the 115 level, which suggests that there's more corrective action. And I think the much more reasonable consolidation, the true value area for dollar yen, is going to be between the 110 and the 113 area on a scale down basis, if you're sort of positioning yourself for a longer term move higher, because certainly longer term U.S. rates are going to expand. Certainly U.S. is running a better economy than almost everybody else in the OECD. But the corrective phase in a dollar move does not seem to be over unless we can hold these lows here. If these lows do not hold, this breaks to the downside. There's probably at least another 100, 150 points to the downside in the yen before we find a true bottom in the correction. So that's how the week shapes up. It's still a dollar corrective week on many biases. There's a potential here for a euro short squeeze all the way up to the 108s. And cable, as always, a complete wild card. Could be tremendously interesting and profitable if you're on the right side of the news, but news is going to be the primary driver of cable. Actually, you know what? I'm sorry, I haven't even gotten to the cable chart. I've been talking so much about it, but let's look at it. And this is what I mean about the wild card. So clearly, technically, this 121 level has held 2 or 3 times, but as you can see, it's a sharp move up, sharp move down, very indicative of the market highly uncertain of its directional impulse here. The one thing that you can say from technicals here that is relatively cable positive is that the fact that the lows have held and the fact that we've had higher lows held suggests that there could be an impulse to the upside. This also, by the way, mildly plays into the whole idea of dollar correction. But of course, the much more stronger view here is going to be the news from the UK. One huge impetus to the upside from the UK side, of course, is if we get a ruling from the UK Supreme Court, which could be indicative of that the Parliament must vote, therefore soft Brexit in play. More importantly, the fact that it puts the onus back on Parliament will completely scrape and scupper the plans of Theresa May to just initiate a Brexit in March. It would push everything back. That would create very fundamentally favorable conditions for UK, because it would mean that UK would stay in the Union, would have a weak currency, its economy will continue to perform well, and all of that could very quickly take us to 24, 25. I think a ruling from the UK Supreme Court, which of course we don't know if it will happen this week, is one of those kind of things that could squeeze us for 200-300 points in a heartbeat. Again, do not fade that move. I don't think that would be a fadeable move. Even on a technical basis, not a fadeable move, because the bottom seems relatively solid. On the other hand, May coming in with just sort of a mishmash of no really great policy proposals and an insistence on a hard Brexit could push us right back towards a retest of this 120 level. Probably, a decent punt here to try to see if the lows hold, on the assumption that there's still potentially possibly good news in cable to the upside. But it's really hard Brexit versus soft Brexit or no Brexit trade still very much there. And for now, the market seems to be technically content to hold cable at this 120.21 level with an upside surprise, and that's how it's shaping up for the week. So overall, it's still a dollar weakness week everywhere else, with yen, a key level in yen at 113.75, with the euro potentially squeezing towards the 108, and with cable, of course, watching this 121, 120 level to the downside, and a potential move to the upside could be 24 to 25 if we get any positive news out of the UK. Wish you guys the best of luck, the best of trading. Boris, over and out.